For Monday, that requires the August future to settle at 23.97, and by Tuesday, around an estimated 23.84 will do it. That sort of daily momentum shift to a positive zigzag will indicate, that chart's not shown, at least to MSA, that this latest short-term sell-off is wrapping up.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and in today's market rundown, we're going to be giving you what we think is a better way to preview how to handle the Fed Open Market Committee meeting decision, which is this week. We kind of view it as two decisions in one this week, and we'd like to give you what we think is a better framework for understanding what can and may not happen. We're also going to look at a very key gold level, which we're right at right now, that could reignite the upside, and that's via Michael Oliver. So there we go. Let's start. The dollar is up 10-year yields are 417, offered unchanged. S&P 500 is 54.77, up 11. The VIX is 1654, essentially unchanged. Gold is 23.89, up 575, 581. So off the lows and honing in on 24 again after yesterday. Silver, 27.85, down 2, back to the old games. Let's buy gold, let's sell silver to finance it. Copper is 405, down 4 cents. That's 1%. So you could just simply make the case that silver is weaker because copper's holding it down. There's no spreading going on, although there is. WTI is down 58 cents at 76.21. That market has been in an orderly fashion hammered over the last week or so. Natural gas, 199 and change, down 3 cents. Energy is soft uniformly. There you go. Bitcoin, 66,674. There's a slam and recoup. Ethereum is 33.37, up 17. Palladium is down 2, and platinum is up 7 at 8.99 and 9.52, respectively. That's getting a pretty wide spread, right? $50 for platinum palladium spread, with the market trading, say, 900 versus, say, $20 when the market rallies. So you could look at it like as the PGMs drop off, palladium is getting hurt more, and as they rally, maybe the spread will tighten a little bit. And there's gold silver. Gold silver, which has been, I think, really active spread. We discuss gold and silver here frequently, but there's a spread. There's a trend line that we drew a while ago. Also, Michael Oliver has that trend line as well. His chart is flipped, and we had a nice rejection. This is when silver caught up to gold, and now here we are back to that trend line. I don't put a lot of credence in trend lines anymore, in this trend line anymore, because now that we've broken it as a amateur technician, I don't put a lot of credence on trend lines that are broken at the same angle that the market is going. So, but nevertheless, here we are. So can't completely ignore it. Have to respect it a little bit. Today, 2 Fed decisions in one. The commentary will be about the FOMC and the end of the sell-off, the end of the gold sell-off, potentially, right? And in premium, we have a Goldman report from July 15th. So that's old by our standards, but the Fed and the mainstream media really don't disseminate information like this anywhere else. So that report is why wait until September to cut. It's actually a very good write-up and factors big into this Fed Day stuff today that we're about to get into. All right, so let's do that. On the homepage, we have China and Latin American silver part 1. This is basically an introduction to the content of an interview or conversation, I should say, that Chris Marcus and I had with an executive in mining, which was very illuminating on topics that we were looking for information on, like concentrate, its importance, what it is in the supply chain. And we also stumbled upon confirming information that we had out of China about their new dominance in Latin American silver, specifically in lesser refined or unrefined silver. So, how much gold is in the Olympic medal? Interestingly, the Olympic medal, the French Olympic medal, the gold medal has like, I don't know, 1-2% gold and like 95% silver. So it's an alloy. I don't know what's in the silver medal, but anyway, that's reality. And there's a Sunday Commitment of Traders Report analysis. There's a 2-hour podcast that we do on weekends and we release for everyone. It's very in depth and it's good if you want to listen to all that. All right, so premium market. So the Fed, right? This is Fed week, and as such, there is much debate over the Fed's potential for a rate cut. The financial press is throwing around phrases that we feel only muddy the waters. As this is an important season because of the BRICS summit and the US election, we wanted to give you a better way. First off, how the market participants perceive what's going to happen. Most think the Fed will announce a September cut on Wednesday. So on tomorrow, Powell says we're going to cut in September. Some think the Fed may actually cut on Wednesday, which means tomorrow Powell could say, hey, we're cutting today. As it stands right now, markets almost 100% believe there will be a rate cut in September. Many feel the Fed will announce a rate cut for September at this week's Fed meeting. Again, some think a rate cut can possibly go into effect as early as this week. Others think that he will announce, the people that don't think there will be a cut, think that he will announce the increased possibility of a rate cut in September, but no promise of a rate cut. And we tend to think, all three of those are actually possible. We're going to go through some people and what they said and how this is flowing into what the decision is actually going to be. This is hopefully what's different about how things are. First, Nick Timiraos. I'm misspelling his name there. My apologies, Nick. He put out a story on July 28th. The Fed's July meeting is all about September. Now, why is Nick important? Nick is the unofficial mouthpiece for the Fed. He's been called Nicky Leaks, or he puts that information. He connects with the financial community when the Fed itself is reticent to talk. So call him a conduit, right? So a Fed rate cut is finally within view. That's on July 28th. Now, a little before that, Bill Dudley said, and Bill Dudley's he's a Fed person and he's a very well-known hawk. He says, I changed my mind. The Fed needs to cut rates now. Waiting until September unnecessarily increases the risk of a recession. And we have the full article footnoted. That's a Bloomberg article. It's a Bloomberg opinion piece. So basically he's ramping up. A couple days ago, it was the 24th, I think. He was ramping up. If Bill Dudley is saying cut now, and he's still a hawk somewhat, then they're probably going to cut in September. That's the walk away I have from that, right? Then you have Goldman's chief economist, Jan, I'm not sure if I say his name right, Hatzius. He says, among other things, using the latest unemployment and inflation numbers, we estimate that the median of the Fed staff's monetary policy rules now imply a funds rate of 4%, well below the actual rate of 5.25%, 5.5%. Based on this observation, the encouraging June CPI, which had just passed, this is from July 15th, and Chair Powell's congressional testimony last week, we expect adjustment cuts to start soon. Then he has a chart. We're going to touch on that chart in a second. If the case for a cut is clear, why wait another 7 weeks before delivering it? And that's a good point. Now, the report is novel, I think, for people that are not familiar with how banks try and reverse engineer what the Fed's going to do. And we like this chart here. This chart, try and spell it out for you a little bit, because it's not easy at first. What Goldman does is they look at the number of job openings relative to the unemployment rate. And this blue area here, to simplify it, this blue area represents what the market was like between June of 2009 down here through February 20. Okay. Now, there was pretty much a match. Now, up here is March 22, and down here is June 24. So what they're saying is this is normal, where there's an even match of uh, available jobs with the unemployment rate. There's a ratio, right? Up here, we had a lot of open jobs. And over time, it has progressed down to here, June 2024, where we have a lot less open jobs. And because we have a lot less open jobs, they think that the next unemployment rate uptick is actually going to take jobs away. So the unemployment rate had been upticking, but that's because jobs were leaving the market that were unfilled. Now we're looking at people actually getting fired. Okay, so you can raise the unemployment rate by not filling jobs that were available, or you can raise the unemployment rate by firing people. They think that people are going to get fired this time. Okay, and they actually think, a lot of people are starting to think that this unemployment number, which is on Friday, is going to confirm 2 days later why the Fed has to ease right now. Okay, we have that report for you. And look, the key phrase is, if the case for a cut is clear, then why wait another 7 weeks before delivering it? Yeah, that's a solid point. Okay, Michael Oliver, right? This now we'll bring it to gold. Michael Oliver believes they will probably cut in July. Too many voices within the Fed, led by Powell a few weeks ago, are arguing that too high for too long is not acceptable. Even the term recession was used in one Fed governor's concerns. That's right. I think that was Dudley. And then he says, for Monday, we'll get into this chart in a second. For Monday, this is his Sunday report that just came out. For Monday, that requires the August future to settle at 23.97. And by Tuesday, around an estimated 23.84 will do it. That sort of daily momentum shift to a positive zigzag will indicate, that chart's not shown, at least to MSA, that this latest short-term sell-off is wrapping up. All right, so the prices that we're looking at are 23.97 and 23.84. Now, his analysis is momentum oriented. This is not a momentum chart. This is me just drawing a simple trend line, showing how 23.97 becomes 23.84. It's nothing about momentum at all. But anyway, you can estimate a trend line doing that, and this is a 4-hour trend line. You end up coming up with 23.97, which we pierced and closed below. This is yesterday's activity, starting here and then going down. And this is today's activity so far. So now we're through the level. The question is, can we remain through? So the bar gets lowered for gold's performance every day. I would like to see this market reject it. If his level is good, and I have no reason to think it's not, I would like to see it reject this level violently today. Meaning, I want the market to rally hard today before the Fed. Then I will be very happy to buy the Fed news. If the market is below his level tomorrow, let's say we're below 23.84 or whatever the next number is, I would say I'm not going to do anything unless the market gets through that level after the Fed news comes out. So that's my integration of his levels with my trading approach. So there you have it. We're at the level coincides with the Fed meeting. So I think that's very relevant. Market news. Here's some more from Timuros, right? I wanted to point that out. Timuros wrote yesterday, the Fed's measure of inflation persistence, the multivariate core trend rate, fell again in June to 2.1%, while he added, with meaningful shelter disinflation arriving in June, the declines in inflation are broadening. Simply put, the stickiness of inflation is unsticking. That's inflation persistence. And shelter disinflation, which lags as inflation comes in, shelter disinflation will also come in, but on a later timeline. And those are starting to broaden. So that's the news I think that matters going into tomorrow. There is, however, something on silver, indirectly on silver. This is about solar and how the U.S. is getting more into solar. First Solar opened the country's largest solar research facility in the Rust Belt state. This is part of the U.S. wanting to compete globally in manufacturing. Pay attention to that. The technology that people are working on now, that companies are working on now, are looking on ways to reduce silver use, but only after improving efficiency. So they're using more silver now to get more power. And they're working on, I had a conversation with someone last night who's really in tune with this stuff. He actually works on solar. And he was telling me that right now, what's going on right now is actually bullish for silver. Right now, the panels are, I'm simplifying, the panels have a 20% efficiency, right? So the panels have 20% charge that they get, right? The newer panels that are coming out have 30%. And therefore, they can spend less money per panel. But because they're less expensive, they're going to make more panels and sell them to more people because they're in the price point now. So it's kind of like as the price point drops, the demand grows and the efficiency is getting better. So they're not reducing silver use yet. They want to, but they're not there. They can't do it yet. Moving on. Politics, geopolitics. Here's what matters today. We have basically a color war going down in Latin America. We said here before, Latin America is America. And the U.S., as the world goes to a more mercantile environment, the U.S. is going to seek to protect its onshoring of supply chains geographically. And that means destabilizing in Venezuela, solidifying in Argentina, and harassing Brazil. And who knows what else is going to happen. But it's back to the 70s. So let's read this. Venezuelan opposition leader Machado said the opposition has the ability to prove truth of election results, while a U.S. senior official accused Venezuela's Maduro government of electoral manipulation. It was also reported that Uruguay's foreign minister said the country will never recognize Maduro's win due to a clear victory of the opposition party, and Peru's foreign minister ordered Venezuelan diplomats to leave the country. So these are the countries lining up with the U.S. Uruguay, Peru, that means Paraguay is probably going to align with the U.S., Argentina. So you're going to start isolating BRICS countries on the South American continent. Pay attention to that. That's going to matter a lot. Trump will end up debating VP Harris, but added that he can make a case for not debating. My take on that is he wanted to not have to debate her, not because he's scared, because he doesn't think she's worth it, but he recognizes the pressure to debate her, and he's probably going to, have some fun with it. But she's being trained right now. The longer he waits, the better she gets at this. So I would hope he did it now. Today, consumer confidence in July. There's something else out today. I'll find out what that is in a second. Tomorrow's the FOMC rate decision. Again, I call it two rate decisions because you've got, are we going to do it in July or September, or are we not going to do it at all? And chances are they're going to do it in September at least. And at the bottom, we have the Goldman Sachs report from July 15th that I think is must read if you're trying to get a better handle on the economics and the rationale for why the Fed should, or if you disagree, should not cut. Oh, what else is out today? Tuesday. Consumer confidence. Oh, home prices, right? Case-Shiller home price index, very important. Case-Shiller has become very important over the years. Let's take another quick look at the markets. Gold is 3 and change. That little chart there, that's where I think we are. Here, we'll go to the daily. I think this is the trading range for now. This was the trading range before the pop. This was a trading range before the pop. And if we're going to have a pop, I'd like to see the market stay in this range for the next day or two. So if we come out today, then Michael's right and I'm all on board. And if we don't, I expect us to come out tomorrow. I'm Vince. Have a great day.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week, where this week's special includes constitutional silver half dollars for only $2.50 over spot, one of the more popular silver items available. And on the gold side, we have 10th ounce American Gold Eagles for only $39 over mil. And to place an order or get your questions answered, call 833-326-4653 or email us at arcadia@milesfranklin.com. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.